Thank you, the moderator, for the introduction. As I said, they leave the best panel sessions for the last. And I think that's still a closing remark from our very own Vincent, right? And there is also simultaneously live streaming on multiple channels across FinTech news, particularly on Facebook. And so this session is a very interesting one, especially in today's FinTech world, particularly in this region, this market. There has been a lot of discussion about mid to later stage of fundraising, Series B and above. Are there challenges? And in this session, we are here to explore and discuss this topic in multi-dimensions with different panelists, especially from their different views, to discuss whether, in terms of the limits of Series B funding, are they due to the companies themselves, the FinTech companies themselves? Are they due to regulatory challenges? Are they due to the entire liquidity in the market, the macro climate? Or in fact, they are not too much of a challenges, especially if you view from a different landscape. So with me today, I have the winner of the Ecosystem Builder of the Year, Sam, from pitchIN. Congratulations again. Dato Haizam from the Hive. Thomas from Gobi. And last but not least, Syed from Artem. Yeah, so before I start, I also would like to make a full disclosure, right? Apart from wearing the hat as the chair of the Fintech Association of Malaysia, my FinTech company, Policy Street, in fact, I have two shareholders on my cap table here in this panel as well. pitchIN, when we did our ECF round in 2020, and Gobi participated in our A2 round and the recently concluded B round. So we'll see in terms of the dynamics in the conversation. So as a start, I'd just like to invite each of the panelists to give a bit of sharing about what do they do when it comes to the investment activities, especially in FinTech in Malaysia and also in the region. I'll start with you, Sam.
Thanks, Wilson. I'm the odd person out. I'm really sitting with the big boys here. The guys who make those hard decisions whether to put their money into a certain company or not. What I do is to facilitate these people when they do their investment. So I run pitchIN, one of the 10 platforms licensed by the Securities Commission. We are the largest in Malaysia. We're going to launch the secondary market. I know Vincent is looking at me like, when, Sam, when? Soon, this month, I promise you, Vincent. All right, so October. So we're going to launch the secondary market, the first ever in Malaysia, and also the IEO. We also have the go-ahead, and we're just waiting to onboard the first company onto the platform. So in terms of where I sit, I've been observing quite a lot in terms of FinTech companies coming on board the platform, raising money. Again, Policy Street did their fundraise on pitchIN. Money Match also did too. Despite having also raised money from VCs in the early rounds, they came on the platform to really utilize the power of the crowd before they could actually then go and scale the company. So I would like to do a small claim that we were responsible for their Series B.
Thank you. I'm an investor.
That's right. So that's my claim to Policy's fame. But at where I sit, it's more about pushing them towards that Series B, right? So I could later share in terms of what I think would potentially be the recipe that I think investors are looking for prior to them reaching that hello road, the Series B.
Right, thanks, Sam. What to you, Dato?
Yeah, I'm the managing partner of the Hive Southeast Asia. We're co-creation and seed fund running one of the Penjana Capital's Dana Penjana National Program, specifically investing to early. Our mandate is actually pre-Series A, but it's with regards to this topic today, it's obviously very interesting and definitely an area that I need to look into because my exits will be Series B, Series C, and beyond, right? So the companies that I've invested into, the fintech companies, a lot of them are nominees. Penology, Pod, Senang Insurance, and Paid. They will be. It's in my best interest to get them to Series B and beyond. So obviously, the topics that we'll be discussing today is of great interest. Previously, and we still are. I'm also run Tuas Capital Partners, predominantly fintech focused, with my partner Tariq, who from CAF. As you know, invested into Genexu, Ringgit Plus, and also Money Match. And they are also consortium partners for the CAF Digital Bank. So both of them are at B and beyond. Looking forward to our discussion today.
Yeah, thanks, Dato. Yeah, Tom.
Good afternoon, everyone. I'm delighted to be here, and thank you for all of you who have stayed for this panel. We hope to make it very informative, and we promise to share what we really think on this panel. My name is Tom. I'm one of the co-founders of Gobi Partners. We were set up in 2002, and as some of you may know, I decided to relocate my whole family, moved out to Kuala Lumpur in 2015, and I've made some great friends, Syed, everybody here, and it's amazing just to see how the fintech ecosystem here has developed. We've been investing, obviously also outside of Malaysia. We had some, I think, some good ones in fintech outside that I can share some of the experiences there, like an Airwallex or a WeLab. But we also think there's amazing things going on in Malaysia. And obviously, I just saw Wilson. We had a board meeting yesterday, and then I saw Yen Ming the day before at the Khazanah Megatrend. So there's been a lot of policy street in the last couple of days. But I think there's a lot going on, and again, for all of you who've stayed, we hope to really share some real insights, what we're thinking, no holds barred, and we also hope to get some great questions and make it a mutual discussion. So thanks.
Right. Good afternoon. I'm wearing two hats now. One, of course, managing partner of Artem. Right. We started actively deploying the funds that we set up in partnership with our partner FWD, right? Since November till today, we have invested into 12 companies, all mostly Malaysia, right? Fintech, insurtech, and anything that is peripheral to it. Now, the second role that I have is currently I'm the chair of Malaysia Venture Capital PA Association, serving members like Tom and Dato Haizam. Right. So, looking forward to this really tough discussion.
Right. Yeah. Thanks, all the panelists. Let me start by saying this, right? In the context of Malaysia, when you define Series B, the amount of ticket size of Series B varies, right? I was just checking Crunchbase, which tracks most of the funded companies across the world. The median Series B investment ticket size, according to Crunchbase, amounts to be about $25 million. Here in Malaysia, if you look at the past 3-4 years, most of the homegrown tech companies, when they disclose their Series B investments, based on my tracking online, I think the amount would range anywhere from $10 million to maybe $20 million. Which is kind of far below the average median size according to Crunchbase, right? But of course, I believe there are multiple factors according to this. Syed was joking in the sense that, whether it's termed as Series A, A+, A2, B, Pre-B, it is subject to the investors who are doing the round in a way, right? But the bigger question is, Series B venture round plays an important role as a bridge to further growth and also potential exit to the later stage of the entire funding and financial ecosystem. Because most of the companies who successfully raised Series B would have demonstrated that they have achieved some form of strong product market fit, Number of headcounts in terms of job creations in the hundreds easily, impacting particular verticals, especially in the fintech sectors, whether it's in the form of insurance, payment, remittances. But yet today, even in my earlier conversations with the audience, there are concerns, there are voices saying that, look, it's not easy to raise a Series B round, especially if you're a homegrown Malaysian company. So perhaps starting with Syed, what are the key challenges you see when it comes to the entire Series B fundraising for Fintech Malaysia as a start?
Well, I guess I probably approach it from this perspective of what Series B really ultimately is just a way to number the number of rounds of funding that you raise along the way, right? First one is A, second is B. So ultimately, there shouldn't be, in my mind, there shouldn't be a benchmark as to how much should it be, right? Because ultimately, to do a comparison from between Malaysia and even Silicon Valley, well, just looking at the shares ticket size is unfair. Pretty much that, the cost of living, the cost of running a business, even hiring a 3-year experience sales executive over there will cost you probably, 100,000 USD set you back. And the guy's take-home pay is probably just 40 grand, a year. So of course, then it also brings it back to Malaysia and saying, it's probably a good news for us to look at, okay, the Series B that we need over here in Malaysia is so much lower because compared to our neighbor or whatnot, right, we probably still have the lowest cost of doing business, in terms of most things, right? So that's one. Secondly is about looking at, every series of the way is about how much money do you need to get to a milestone that you need to sell to your investors. That is more important than how much money that the investor pays you. So it's the outcome that matters a lot more. And when you're talking about Series B or whatnot, it's essentially, okay, I've done whatever that I'm supposed to do at the Series A. Here is my next milestone. And be very truthful about, okay, how much runway, how much time do you need? And then along the way, how much money do you need? I think that's the essential conversation that has to be had before we talk about, hey, come on, where's my 10 million? Where's my 20 million? Because Silicon Valley gives you 20. This is not an attractive place to be in. Let's move. Oh, go ahead. And then you pay your rental and your staff, fresh grad in Singapore, 6,000 Sing. Yeah? First out of the school. Well, deal with that, right? So I guess Malaysia is a pretty blessed country, even now, particularly now when we're talking about inflation. Yeah.
Yes, right. Thanks, Syed. I just want to draw the attention to Tom, right? There are two questions here. The first question, you mentioned that you moved to KL in 2015. So perhaps it would be interesting to share with the audience what drove you to move the regional headquarters here to Kuala Lumpur. And secondly, the questions related will be more on, Gobi is a pan-Asia fund. You invested across multiple stages, China, GBA, this part of the world. And particularly to the Malaysian audience, do you think the local fintech companies, when they compete with the global fintech companies, they face different challenges when it comes to fundraising, especially in Series B and above? Over to you, Tom.
The first question again. Sorry.
Why did you move to KL?
Yeah, okay.
In 2015.
I came out to KL. So the story is, I'd like to say I had this magic crystal ball, and I could kind of see that the U.S.-China trade war was going to happen. But I think there's some people out there who think that I thought that, and I won't deny it, or I won't, but actually I didn't know. I really came out to Malaysia because the data was showing that Chinese startups, so Gobi was set up in 2002, we invested into a lot of companies. Actually, the first office when we went international was actually Singapore in 2010. just to be transparent about that. But then we saw that Chinese companies were spending a lot of effort, marketing dollars, just trying to get into the U.S. and Europe. And we would, as board members, right, Wilson, we look at the numbers. Oh, that's great. And then we're like, oh, you're spending all these marketing dollars. So how many users are we getting in the U.S.? And it was like, not very much. And we're like, wait, why are you spending all the marketing dollars? So where are you getting users from? They were all coming from Southeast Asia. And so one example I always like to give is, how many of you remember there used to be an app called Camera 360? I know I'm really dating myself here now. Do you guys remember that app? Okay, Camera Sanliuling, right? And that company was like probably one of the first Chinese apps to get like 1 billion downloads. And they were spending a ton of money in Europe and in the US. And we were like, oh my God, it's working. They're spending all this money. And it turned out all the users were coming from Southeast Asia. So we were like, wait a minute, why don't you cut the spending and just spend more in Southeast Asia? And they were just like, well, Southeast Asia, not, they just had these like weird kind of perceptions that I still think to a certain extent exists in China, but is changing. And so when we saw the data, we should be spending more time here. A lot of people were at the time all connecting the US to China, east to west. And we thought that was a great idea, right? Number one economy with the number two economy. But Gobi, we always like to think a little different. So we said, why don't we connect Northeast Asia with Southeast Asia? And again, this is kind of 2010, okay? And we said, okay, that's cool. Let's come up with a catchy name. So we called it Crouching Panda Hidden Tapir, right? It was like, all right, that's cool. Everybody's going to do it. We're going to like, oh, we got this great name. Everybody's going to follow us. And nobody did. I ended up coming out to Malaysia because none of my other younger China partners wanted to come out. I'm an older guy. I got, gray in my hair. And I was like, I'm having a great time in Shanghai. My wife's from Shanghai. Kids are in school. I'm having a great time. And I was telling all the younger guys in China, I said, you should come out. You get an international experience. I'm already from the States. I did the reverse immigration to China. And they were like, no, what are we going to do about my kids' education? How are they going to get into Tsinghua? And I was like, okay. And then they all looked at me and they said, Tom, since you keep pushing Southeast Asia, why don't you go? And I was like, and sort of at that time, you got to man up, right? I'm like, okay, yeah. And I went to my wife, and my wife was like, what are you thinking? And then I said, well, look, we could go to Malaysia. It's like, well, we always like to vacation anyway. And so we said, it was supposed to be like, well, we'll just do it for a year, and then and it ended up being, I've been here 8 years now. So I think what we saw in Malaysia was there were just a lot of ingredients. And I think this ties back to the second question. For me, I think the advantage from Malaysian startups, and again, valuation and how big your Series B, you gave a number that the average Silicon Valley or China Series B is about 35 million, in Malaysia it's 10. I don't think, you guys got to remember, that's not Malaysia's problem. It has to do with your total addressable market, right? The US and China, it's just like 3 times bigger. Actually, I'm surprised Malaysian, Series B are that high, given that Malaysia only has a market of 30 million. And so if you look at like, hey, you're raising a 10 million Series B versus a Chinese startup with an addressable market that is much bigger, it's actually better than people are giving it credit for, actually. So that'd be my first response. The second response I have is just Series B in general is hard to raise everywhere, right? It's not just a Malaysia issue. It's just, in this current environment, it's hard to raise anywhere. So let's just be clear about that. And then the second thing, so I think, but what I think for fintech startups in Malaysia, you have to figure out, Malaysia can be a great, I think, springboard to other markets. And that's how I think you increase your potential Series B raise, because you're increasing your TAM. And that's why I think a lot of Malaysian startups, obviously they go out and regionalize into Indonesia and other markets, right, like what Policy Street's doing. And I think that's really potentially a hidden advantage.
Right, thanks, Tom. Dato, you have backed quite a number of homegrown companies, fast-growing Malaysian companies. Allow me to tune into a bit more about scalability and also market expansion agenda. I think the question here is, as an investor, when you look into investment opportunities and also for the startup founders out there, what would be your advice or what would be your thoughts when it comes to strategies and milestones important for these companies to demonstrate to you as an investor when they are thinking to seek your confidence and also willingness to write them a check for investment, especially in the slightly later stage Series B round?
So that's a very pertinent question for me as well, because in 3 to 4 years' time, I'll be talking to these US VC funds, as you mentioned, Singaporean VC funds, or with my companies, right? In terms of the problem that we're talking about with regards to the Malaysian, not problem's probably the wrong word, but the issue with regards to the Malaysian companies at Series B, let's roll back a little bit. Let's just say 10 to 20 million US Series B in Malaysia, which would mean that the company would be 250 million to 500 million ringgit in size. For a country with 30 million people, that's almost near impossible. That's almost near impossible with regards to the target, the TAM, right? So you look at 3 main issues is that you need a big market. That's an issue with regards to us. You need a regional footprint. So you guys have done that. I think in terms of success stories, SoftSpace have done that they went into Thailand very, very quickly. So you need a product that can go regional very, very quickly. And then the third one is you need a cutting edge, sexy business, right? So right now is generative AI, et cetera, right? With fintech companies in particular, even more difficult because of, let's just look at Southeast Asia in general, the regulatory differences between all the different countries. I'm pretty sure that you face that tremendously, and it's not easy. So, as I mentioned, with regards, you have to address all those 3 issues and take it one step at a time. But it's not easy. It's very difficult. Same company doing exactly the same thing in Indonesia, in Vietnam, in Malaysia, same revenue stream, same products, etc. A US VC fund will look at the Indonesians and the Vietnamese at this moment in time for Series B, right? So addressing those 3 areas, regional footprint, getting that as quickly as possible, and also the product, really, right? You need to address all those different issues. Yeah.
Right. Thanks, Dato. Well, Sam, since you have been recognized as the ecosystem builder of the year, so I get off the script a little bit to ask you questions, but pretty much relating to your line of work, right? Malaysia being one of the first market to regulate equity crowdfunding, and I tend to believe that we have a thriving alternate finance or alternate fundraising ecosystem. So from your perspective as a leading ECF operator, how do you see the opportunities for Malaysian fintech companies when it comes to raising Series B and beyond? Is there enough volume and opportunity for them to tap into through ECF, or they have to stick to more of the late stage VCs? What are your views?
Sure. So I think if you compare the framework for ECF throughout ASEAN countries, ours probably the most progressive. We were the first, and I think the regulators have not stayed put. And you could really see if you were to watch how SC respond to every things that's happening around the world, you would see that what you saw in terms of the framework in 2015 has really changed in 2022 and 2023 in terms of how they're regulating the platforms, how much money people are allowed to raise funding on the platform. It has drastically changed. Compared to our peers in the region, I think we probably have the most dynamic ecosystem in terms of equity crowdfunding and P2P, something that we don't really celebrate. And Malaysians are bad at really beating ourselves on the chest, saying that we're good at something, right? But if we're bad on something, we'll probably be the first one telling the whole world how bad we are, right? So that's the problem with us in this country. So when I look at the numbers in terms of equity crowdfunding platforms, in ASEAN, you'll be surprised, pitchIN is actually the biggest, comparable to all the ASEAN platform for equity crowdfunding, right? And again, we don't shout about that too, right? Even the regulators were not aware until we told them that, hey, we are, right? And that has also attracted a lot of attention from our Singapore peers too. They wanted to know why it's so dynamic in Malaysia. I think the retail participation is helping. I think a lot of people in the early days put down a lot in terms of getting money from retail. People think that it's dumb money. I beg to differ, it's not dumb. I think those who really understand how ECF works will see that retail guys are probably the most supportive of whatever you do, right? Even owning a small number of shares, to them equals a lot of shares, and they're going out there, I would call it shouting about your company. Now, in terms of the potentiality of what companies in the fintech and insurance tech ecosystem coming on the platforms like pitchIN to raise funding, I think we've seen examples of that, right? You did it very well. I think this is probably, I think Wilson probably ran one of the most tightest campaign ever. And this was the height of the first pandemic, when a lot of people didn't know what are we going to do when we can't go out there to meet people in person to fundraise, right? And they did it virtually through Zoom, right? Every week. In fact, it was oversubscribed, actually. And they had to close the campaign a week earlier because they didn't want to give more shares away to the investors. So that was really a great campaign. But then they were examples which then allowed people like Money Match to come. And that was quite a surprise because Money Match at that time were already in the digital consortium, right? So I think companies like Policy Street are those poster boys of fintech companies that can prove that you can actually go on the platform, raise money not just from high net worth and angel investors, but also retail investors, right? And now they've gone and raised their Series B, which is probably, second, third largest that I've seen. I think the largest would still be SoftSpace, 31 million. But it's proven that you can do that. Now, the other option for companies, if for whatever reason they face some challenges in terms of raising money from these guys, then you got the option of going to a digital token offering, right? So that is available too. The funds that you can raise from that could be as high as 100 million ringgit. That's nearly 25 million US dollars, right? So that's also another option that companies can come and try to raise. We're trying our best to get these people to try to also look at digital tokens as a form of investments too. That's going to take some time in terms of getting VCs into that particular landscape. But I think alternative fundraising in Malaysia is probably one of the most dynamic in this region. I think the more and more participation that we see from Tuas Capital, Gobi, and also Artem would actually spur this into a sphere that you've never seen in any ASEAN country, and something which I think we should take advantage of. Yeah.
Now, Sam, I'm just getting you to elaborate a little bit more, because pitchIN is a regulated entity, it's a registered market operator with the SC. And I think fintech as an industry is very unique, right? Most of the fintech operators here in this room and those who are streaming in online, we have to deal with regulations. It's very different from other segments. And it's not the most easy thing to do when it comes to dealing with regulators. And sometimes, especially when we are operating in the more newer or innovative space. Earlier on, we have BNM with other panelists who were talking about the digital insurance framework and what to expect. So Sam, what would be your advice to the fellow fintech operators out there when it comes to dealing with regulators? What are some of the must-do or must-have?
Right. So being a former regulator myself, I do understand the language. I do understand how you dance with regulators. You should do a slow dance every time. You shouldn't go and do a mosh pit with regulators. They hate that. It's always a slow dance, learning to dance their way before we lead them into the mosh pit, right? So regulators have things they need to balance, right? And I think companies like pitchIN, for example, we like the space of being regulated. That's probably our number one hurdle for anyone to come into our space, right? So we love to be regulated. It gives us clarity in terms of what we can and cannot do. But if you want to do something new that is not there, then we engage. One of the myths that I think a lot of startups feel, and again, I don't blame them because they get frustrated when they don't get their ways when they talk to regulators, is that regulators are actually listening, right? They may not get there tomorrow, but they will get there later. It's just a matter of engaging with them and not really giving up, right? So my experience dealing with regulators has always been very positive, right? And I mentioned that, and as I mentioned, if you look at the framework, a lot of it, the changes in the framework that you see right now for ECF has a lot to do with the engagement that we, from the ECF platforms, have done with the regulators. Again, I can't speak of anything negative about my own experience, but I have a much more better relationship because I am managing my own expectations, right? Based on what I see, what's happening around the world, what we are in Malaysia is at the same level, if not even better, right? Do we stop here? No. There are a lot of things that we want to do on our part, but we will take that when the time is right. And when, also most importantly, when the market is right. There's no use me wanting to lobby SE to do certain things when I know the market is not even right or ripe to begin with. Yeah.
Wilson, if I may, yeah. No, talking about regulators, Securities Commission, I must say, my experience with the Securities Commission, specifically recently, is they're very forward-thinking, and I've been quite impressed with that. Getting very involved in the venture capital industry, always being engaging with us. I think you've seen with a lot of the events they hold, et cetera, et cetera. Recently, so one of our latest investment, actually, seed investment into someone who spoke here recently, Han from Haizam. So we're one of the seed investors. So they have a digital asset license from the SC, and they just launched the first digital crypto fund, which is the world's first digital crypto fund, which is amazing coming from an SC. You think of the SC as archaic, but they're actually thinking outside the box. Digital insurance, the Dato, digital insurance and takaful operators. Again, that's opened up completely the market, and who does it benefit? The digitalization of the insurance market. More insurance products for the masses, for everyone. And this is largely led by the SE. And I think I've been very impressed with how they're thinking. One of the reasons why we invested into Haizam is maybe they learned as well. Like you said, is learning, is engaging. Is Han and Lucas was in Genexu. Apparently, it was very painful during the Ringgit Plus times, but they've learned, and I think it took them less than a year to get the license for Haizam. So as long as you completely engage and you learn with them, but been very impressed with the SC.
Yeah, thanks, Dato. Tom, I'd like to address this question to you. I think one of the elephant in the rooms is that in the mind of a lot of the fintech operators, at least in this market, there are questions, there are concerns which go like this, right? Are there enough Series B and later stage investors in Malaysia? Or, as a homegrown company, one must look for regional investors down south in Singapore or overseas to raise the Series B and above funding. What's your take?
Boy, I actually think, again, first of all, I echo what Dato was saying. Is I think the SC and the equity crowdfunding ecosystem in Malaysia is probably one of the best. Not only in Southeast Asia, I would say in the world. And again, I don't think Malaysia gets enough credit for that. And sometimes I think you need outsiders like me to remind people. I've seen a lot of the equity crowdfunding systems. I mean, everybody's trying to copy what Malaysia is doing. So I think that's one. The second point you said, is there enough capital, right, in Malaysia? So before I answer that, let me just frame it. maybe share how I look at, if you're a Malaysian startup, how you can position yourself. I always go back to the Goldilocks theory. You guys remember Goldilocks and the three bears? So here's what I would say. It's like, you got Singapore, Indonesia, Malaysia. And I would just say that Malaysia is kind of right in the middle. It's just right. What do I mean by that? Okay, so let's just play a game here. And I know Syed and Dato and Sam probably seen this. If you're a startup in Singapore right now and you raise $3 million, the Singapore startup is essentially a global startup from day one. Would you guys agree with that? So whatever they're doing, they're going to start. Let's say they raise $3 million. They're going to attack a global, because it's based in Singapore. They got to go global. If you're an Indonesian startup, you raise $3 million, you're probably going to do Indonesia. And if you raise $3 million in Malaysia, you're probably going to focus on Malaysia. Okay, now let's fast forward. Again, these are just stereotypes. Please don't quote me later. Give me one example that doesn't work. Okay, the archetypes. Okay. 12 months later, I would argue that if the Malaysian startup has done a good job, it is much easier for the Malaysian startup to show traction and be a top 3 player in Malaysia than the other 2 startups. Because with 3 million, it's hard to become a top 3 global player. And it's very difficult for that Indonesian startup because they're just fighting in a bigger market. So the Malaysian startup, and this comes back to my Goldilocks theory, is just right. It's because Malaysia is a relatively, it's not huge, but it's bigger than Singapore. And it's smaller, more manageable than Indonesia. So when you're raising the Series B, if you can put together a business plan that I can become number 1 in Malaysia and I'm about to regionalize, I actually think that's very easy for VCs to go back. So instead of focusing on Malaysia, we're not a big market, focus on the strengths, which is with a relatively, decent market size of 30 million. I get my Series A. When I'm going into my Series B, I need to be able to show that I'm probably top 3, or even better, you're number 1 in Malaysia. And I'm starting to regionalize. That's why I'm raising my Series B. I actually think it's a lot easier for the Malaysian startup to do that than relative to the Singaporean startup or the Indonesian startup. I don't know. Do you guys agree? I mean, that's just kind of my mental map. And then I think it's easier for the Malaysian startup. Once you can show you're number 1 or top 3 in Malaysia, you're raising the Series B because you're going to go to another market, but you also are operating from a position of strength in Malaysia. Whereas I think that's similar in our example. If you're an Indonesian company, raise $3 million. If you're number 1 in Indonesia, I guarantee everybody's going to go back to that. But I don't think it's as easy to get to be a top 3 in Indonesia with just $3 million after a Series A. Sorry, did that make sense? Or no? Am I totally... Okay, I mean, feel free to critique that. But that's just kind of what I say. So now back to your point is there enough capital? I think there is a lot of capital. I think you guys have read the headlines, right? Khazanah, QAP, EPF. I think actually when you look at relative, not only in Southeast Asia, but in the entire world, there's money in Malaysia. And again, I don't think people realize that. I actually think if you go to Singapore, actually, I have met more Singaporeans coming to Malaysia recently than the other direction. I don't know if you guys have sensed that. And I was just at F1, which was fun. But everybody I met at F1 was like, I'm coming out to Malaysia the week after. It's because I think all the government policies, it's starting to attract attention. I'd be curious to hear everybody else's viewpoints.
Right.
Like it.
Perhaps just to supplement what Tom's saying, right, is that I was just doing a bit of a scan as to how many funds are there, right? Not just Malaysia, funds that are out there looking at Series B and beyond, and they have a mandate to look into Southeast Asia, right? By my estimate, there's about $3.8 billion US. Yeah, so a lot of dry powder. I think where we probably need to focus on is that what's your story? Yeah, can you attract them to come over? Right, I always, even in the good old days, during the CF days, is about what's your equity story. The money will follow the corporate. It's not you chasing the money. So if you are in that position, number 1, number 2, number 3, right, I think you probably have a lot more conversation going on, knocking your door, rather than you chasing after it. So in short, focus on the business. That's your principle number one. And then the money will follow. Yeah.
Yeah, thanks, Syed. Dato, this question is for you. When we talk about fundraising, and especially from an investor's perspective, what are the key factors as an investor you are looking closly at when it comes to considering whether to invest or not, especially in the Series B stage and above?
Okay, so interesting question. I mean, let's look generically as well. What's been interesting with regards to the last 2.5 years, 3 years, a lot has happened. Obviously, the after effects of COVID, et cetera, et cetera. When we first started the mandate with Panjana, it was all about growth. So growth, numbers. That's it. That's all we were fixated about. And I think you can look at our portfolio, very similar to that. Then we went through 2022. We only made one investment. 2021, we made 5 investments. 2022, we only made one investment. And then this year, we've ramped up again. But the reason being is capital became much more expensive. The growth figures weren't really there anymore. And then we started to look at sustainability of the companies. How long is your runway? If I give you this amount of money, how long is your runway? How sustainable is your business, right? So right now, this current year, again, it's the focus is on sustainability, defensibility of the company, with a growth aspect to it as well. But going back to my first points with regards to the 3 different areas with regards to Series B, is how possible is it that this business, this Malaysian company can go into the regional footprint? Are they already there? As I mentioned, they need to already be there. Source-based was successful because they went there very, very quickly. You see Indonesian company like Zendit now looking out as well, and even the Indonesian market is so huge, right? But they are, of course, they are a unicorn. Then you look at, I guess, the actual business. Right now, my partners in the US, the Hive in the US, everything is about generative AI. So how do you make your business, that sexy that you can then go into other regional markets and you can grow your market, right? So in terms of what companies that I look into, specific, not just Series B, it's the potential to go as big as possible into a regional market, and then also the founders, right? Going back, I've always said this, it may not be popular, but I always say that you want to invest into a founder that will be able to mortgage their house and their dogs for the business that they believe in, right? You want to be in it. You want to be able. You're a partner to the company. Yeah. So we only go into investments that we feel we can also add value, that we have a significant advantage, significant ecosystem advantage, market advantage. We can add value. It's no surprise that a lot of my investments are in the fintech space, specifically my previous, because obviously my partner was with CAF. My background is in the financial space. So yeah, really it's investing into great ideas that has the potential to go beyond Malaysia. But as Tom said, you need to be a jago kampung first. You need to be the champion here to win it. Yeah, yeah. Sorry.
Right. Yeah. Thanks, Dato, for answering in a very comprehensive manner. So I'll open up to the floor to if anyone has any questions. If not, I will continue to ask more questions.
Wilson,
Sakit.
while we're waiting for that, just talking specifically on the Series B, right? Particularly, basing on what has happened in the ecosystem of all the scandals and whatnot, right? So I think any founders, regardless whether A or B, but particularly more so Series B, right? Be ready for a really high level of scrutiny. And we have not even talked about, data audit, yeah? Whatever matrix that you report, right? In the past, a lot of founders manage to get away by just presenting what you show and then get people excited with the charts, right? And then after that, I don't know to what extent details work are done. And pretty much, that was basically, what causes all the, yeah. So I guess, as a founder, please get your data ready, tidy up, get the house in order, and then open the door and let people come in and comb through your data sets. Yeah, that is very crucial these days. If you're not ready, you will not be able to pass through. That is going to take you maybe another 12 months before you clean it up. Yeah,
Exactly. Make sure your data room is presentable and ready. Vincent.
Just going back to one of Sam's remark about how there's a perception that money that goes into ECF is dumb money. I hope that's not the case, because I also have put some money into some fintechs in there as well. But jokes aside, I just want to throw an inflammatory question in the mix and see how you guys respond. I guess if you look at the SE report from last year, they indicated that alternative financing has raised 1.7 billion, while VC funding has raised 1.1 billion, if I have my numbers correctly. Are the VCs doing enough?
I suppose to be fair to the VCs first, right? I suppose to be fair to the VCs, a large chunk of that 1.6, 1.5 billion? Yeah, it's P2P, right? So it's not really apple to apple with the VCs. In terms of equity crowdfunding, which is apple to apple with the VCs, I think that number is probably half. How much? Yeah, 200 million. Yeah, 200 million ringgit. Most of it from pitchIN. Okay, 300 million. 300 million.
That's a good plug.
300 million ringgit. But before the VCs answer that, right? But so you compare that with the VCs, still way below. But I think it's still something which I think a few years back people couldn't imagine that people like you guys in the crowd would be able or would even want to cough up 1,000, 2,000, 3,000 ringgit. In fact, the largest single investor we had on pitchIN was a guy who put in 3 million ringgit in one deal, right? We're still waiting for him to come, right? But yeah, if you want to respond to that. Again, I think it's not fair to compare that because it equals P2P. So from ECF is 300 million ringgit plus, which is still quite low compared to what they've done. I think given the fact that the man on the street is putting money, I think 300 million ringgit coming from the man on the street is quite commendable from what we see.
I think in terms of the VC side, is definitely in the last 3 to 4 years has been very, very interesting. Myself, Syed, Tom, we all run separate funds under separate government agencies. Myself, Penjana, Tom most recently with the Dana Impact under Khazanah, et cetera. So it's great that more private sector VC funds are getting involved. And you can see that, I've done 11 investments. I think the Penjana funds have done about 50 investments. And if you look at that, we have a 6-year, actually we have 3 years plus of investment period, and we're at the tail end of that, probably another year and a half left. 600 million ringgit is from the government, 600 million ringgit from private sector. So essentially you have 600 million ringgit has already been there with previous public sector funds. But it's new money, 600 million ringgit new money. And that will be invested into the VC space. We do have a mandate, and to a certain extent, there are certain constraints to it. But I think that money is new money into the space. So I've invested 20 plus million ringgit, of which half is private sector. I think that 10 to 15 million ringgit is new money, right? That probably wouldn't have invested. Would Halogen have been invested into? Would Pod have been invested into? Especially at the early stage, which is less. That's where the I guess demand is there, and then the Series B side as well. There is new money in there, right?
Right. So yeah, Tom.
Yeah, just to echo what Dato was just saying is, I think again, Malaysia, people forget when the government's been very supportive, right? If you think about Penjana and then prior to that MavCap, I mean, one of the reasons why Gobi came was because of MavCap. We brought more money, also investors from China. What they did, kind of backing guys like us. And this was 8 years ago, like us, and of course our good friend Kylie's not here at 500. But if you look at the collective, I think the will here on the stage, and I think what's great about Malaysia, it's still very collaborative. It hasn't become, how many of you know Chinese? It hasn't become juan, right? Where it's overly competitive. The VCs hate each other. Yep. I mean, we actually like each other because we're working together, right?
We're all friends.
It's because we're all trying to grow the ecosystem. It hasn't gotten to it where it's overly competitive and it becomes sharp elbows because everybody's going after the same deals where you got too much money chasing.
Actually, all four of us are in all same deals.
Yeah, we're very, very, very collaborative because there's one mission, right? And I think that's what's it's critical. And hopefully this lasts. It's like a golden era. We'll look back, right? But you think about it. So it's like if you think about the programs, you had MavCap, you had Penjana. And all the agencies out there working for the startups, right? MDEC, Cradle. I mean, just so. I know a lot of people in Malaysia are like, there's too many. We gotta, streamline them. I actually think there's just so many channels. There's never been a better time to be an entrepreneur in Malaysia than now. I mean, I remember when I got out here 8 years ago, and to where we are now, the people that I've met, how the ecosystem has matured and developed. And I also want to just give credit to like what you guys are doing, Fintech News, right? Creating this type of a forum where people can get together. This is really what's making a difference, right? Building out that ecosystem. And first of all, I always want to remind entrepreneurs, hey, this is meant to be hard. It's meant to be hard. You're not getting funding. Nobody's going to drop money out of the sky. So sometimes I remember I was at the Kazana Megatrends. Dr. Eric Lee had a great thing. Stop whining. The money's there, man. You got to go out and get it. You got to convince people. It's part of it. If it were work, it wouldn't be called work. It'd be called fun, and it's not, right? So you just got to go out there. But I think the conditions have never been better in terms of support systems. My goodness, the amount of accelerators, incubators. I almost get concerned now because you got people. That's why the data audit's critical. I mean, 8 years ago, you had people coming in and they just couldn't present. And it was so easy. And now there's the incubator programs which teach you how to present to VCs. Can you believe that? It's like the SAT prep course for fundraising now, right? So I'm saying the support networks, it's never been better. I mean, if I got to say something controversial, I mean, if you're out there, look, the resources are there. If you're not getting funding, you may want to rethink your business plan. How's that? Instead of blaming, maybe we're to blame as well, right? But I'm just saying, and maybe that's not going to win me anything. Hey, don't stream that, okay? We love you, okay? But you know what I'm saying? It's just the ecosystem, the support systems have never been better. I think the government has done so much. I mean, there's been, I know when I first got here, there was so much talk. A lot of that's trickled through. And I know government, they got to consider many factors, but a lot of the things that I remember people talking about years ago are happening. And it's trickling down. I mean, so since Gobi got here to now, we were just doing a count, we've invested in about 40 startups now in Malaysia. 40. Right? And again, we couldn't have done it without the support of all the government agencies, our friends, the ecosystem, and there's more. I mean, we have more that are going to come. So if you're an entrepreneur out there, I think there are folks that are ready, but you got to have a good idea too. Hey.
Winston, also another perspective about that question, right? Comparing or putting ECF and VC side by side. I think the example that Sam quoted, the lorry, you guys, Policy Street are just basically a subset of the funds that got raised through the platform. But there are a good segment of businesses that are not VC fundable, and they're good businesses, right? Hence, I think the role that ECF is playing is way more than just what we are looking. Yeah, because the nature of return, the nature of businesses that we want to fund and ECF are so different. Yeah, a lot of times.
Yeah, so in the interest of time, I would address the last question to the ecosystem builder of the year. Sam, you have seen across through your platform so many different issuers successfully raise fund throughout different phases, different stages. And if you were to condense all these activities into one summary, right? Especially to the founders out there who are looking to raise fund, especially in the later stage, Series A+, B and above, what would your advice be when it comes to fundraising, especially at this climate?
Yeah, so there's a long answer to that and there's a short answer to that. I prefer the short answer because it's 3 minutes left. So the short answer to that, and it will be followed by a lot of things that you need to do, right? But the short answer to that is don't chase money, attract it, right? And you can only do that if you're a great team, you have momentum in your businesses, you get a great compelling story beyond what you are right now that really would make things easier for people like you guys and people like these guys to invest in your company. So don't chase money, attract it. Yeah.
So with that, thank you very much. Let's give these panelists a big round of applause. Thanks, Sam. Thank you, Dato, Haizam, Tom, and Syed. Thank you very much.
Peace.